Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. But the general trade setup seems to be improving. The SGX Nifty has managed to inch into the green. It's trading up by 3 points, so inching in closer to the 10,400 mark in trade. So this is something that we need to watch out for. Most of the ADRs managed to end decently well. So ICICI Bank was up 1.5%. Wipro was up 1.5%. But whether Wipro will sustain post the warning guidance that it gave yesterday is anyone's guess. Dr. Reddy's and HDFC Bank also managed to end in the green. What didn't do well were counters like Infosys and Tata Motors, which were down in trade. Now, coming to what happened with crude. Crude surged over 2.5% in trade yesterday, again managing to inch back on the positive side. So Brent is inching close to the $69 barrel per mark, and WTI is closing in on the $63.50 barrel per mark. The big talking point yesterday was the surge that happened in aluminium. Aluminium was up almost 8% in the last two trading session. It closed up almost 5% on the LME. Even copper as well as nickel traded up much higher. But look at the traction that's happening even on the Chinese markets. Copper is up 1%. You have zinc and aluminium, which are up anywhere between 0.5 to 0.8%. And look at the rebound in steel. Steel is up almost 2% in China currently. Most of the precious metals have managed to inch, have actually managed to go into the red, but yet it's range-bound trade for the precious metals. Now, FIIs were net sellers in the markets yesterday. They sold in 1,300 crores. DIs bought in almost 360 crores in the cash market, but on a month-to-date basis, DIs have been heavy buyers in the cash market. Sector-wise, if you're looking at it, the Nifty Bank has moved up 1%. The Nifty Mid-Cap and Small-Cap also ended with a positive bias. What did well was the PSU Banking Index as well as the Nifty FMCG Index. What didn't do well, pretty much the IT index and media index, which were down almost 0.5% to 1.1% in trade. The VIX managed to stay pretty much at the same level since the market was rather stable. The Nifty moved up almost 50 points. Private sector banks and ITC led the rally while IT was weak. But Agam, what are you making of the FNOQs?
Right, Darshan. What we saw was the Nifty, of course, advanced by almost 50 points, but there was very little change in open interest when it comes to its futures. And the same for the Nifty Bank futures too. We did see a little bit of unwinding. What does it mean for the India Volatility Index? Well, not too much to speak for, still below the mark of 15, and that can be considered a positive, at least as of now. The put-call ratio, of course, remains unchanged, largely at around 1.44. But what we've really seen is a little bit of range building yesterday after we saw more writing in the 10,300 put. And, of course, the 10,700 calls saw a little more writing coming along as well. In terms of stocks, we're watching out for something like a Balkrishna Industries, which extended its gains up another 5.3%. So a lot of strength coming in there. And a lot of strength coming in Page Industries, where we saw another 17% increase towards OI, towards fresh longs. On the losing end, however, we did see some weakness in Mindtree, so we're looking at shorts there. But on the whole, we'll be watching out for more cues as to what global sentiment does for our own markets. That said, let's now go across to Bloomberg's Hasnida Amin, who's standing by to give us the big headlines from across the globe.
The Dallas Fed President Robert Kaplan says interest rates should be raised because the U.S. is near full employment with firmer inflation likely this year. He told Bloomberg Television the central bank is watching the yield curve very carefully because the history of inverted curves is not positive. Kaplan also told us he doesn't think trade issues between the U.S. and China will be resolved quickly.
I would say that I would guess that both sides might be well served to lower the heat on the rhetoric, because there have to be very fundamental private discussions, not only on reciprocal trade and tariffs, but also on issues like intellectual property, technology transfer, the ability of foreign companies to do business in China. But all that requires pretty blunt, direct, private conversations.
China is said to be evaluating the potential impact of devaluing the yuan as part of its response to the worsening trade spat with the U.S. We're told senior officials are studying a two-pronged reaction, one that looks at the effect of using the currency as a tool in trade negotiations. The other assesses what could happen if the yuan were devalued to offset any impact from tariffs. The FBI has raided the offices of President Trump's longtime lawyer, Michael Cohen, seizing documents after special counsel Robert Mueller applied for search warrants. Cohen has been a key figure in a series of legal issues. He paid $130,000 to porn star Stormy Daniels over an affair she says she had with Trump. Cohen said he made the payment without the president's knowledge, using his own money.
It's frankly a real disgrace. It's an attack on our country in a true sense. It's an attack on what we all stand for. So when I saw this and when I heard it like you did, I said that is really now in a whole new level of unfairness.
And Mark Zuckerberg will tell Congress later that Facebook's problems are his responsibility. He's due to give 2 days of testimony over the worst crisis in the company's history and will say it didn't do enough to prevent fake news and potential harm to users. Zuckerberg will also try to explain how much Facebook contributes to the world, while also accepting he didn't realize the consequences. Global News, 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Haslinda Amin. This is Bloomberg.
In a stock exchange notification on Monday, Axis Bank pointed out that it was cutting short the extension on the reappointment of its MD and CEO, Shikha Sharma, on Sharma's request. According to the notification, Sharma approached the board and said that instead of giving a 3-year extension on her appointment, which would have started in June this year, she has asked that her appointment be cut short from June to December alone, just for the 6 months. And now, according to some of the people who have spoken to Bloomberg Quint on conditions of anonymity, this is pretty much sort of a resignation, and that these 6 months that Shikha Sharma is asking from the board is primarily for a smoother transition of power from one CEO to the next, whoever will take up this role after. Interestingly, this move by Shikha Sharma comes in after the Reserve Bank of India denied the approval on the 3-year extension that the board had given last year. So remember that once the board approves an MD and CEO of a bank, it sends this approval to the Reserve Bank of India, who has the right to give a final seal of approval. And only after the Reserve Bank of India's approval comes in will the extension be considered valid. So the Reserve Bank of India has been holding back on this approval and had asked the bank's board to reconsider their extension given to Shikha Sharma in light of all of the NPA problems that have come up in Axis Bank. Remember, over the last 2 to 3 years, Axis Bank has seen its gross NPA number jump considerably because of various asset quality reviews as well as a risk-based supervision that the Reserve Bank of India had conducted on its books, and found out that certain loans which, according to the RBI, should have been NPAs were not classified as NPAs by the bank. So in light of all of these developments, the central bank had asked Axis Bank's board to reconsider this extension given to Shikha Sharma. Of course, all of this worked in its favor because Shikha Sharma, according to the sources who we quoted earlier, was anyway looking to exit the bank. And after this delay in reappointment, that sort of need became more important, and Shikha Sharma asked the bank's board to relieve her of her duties as soon as possible.
I think we all get by what 2-liners and 3-liners all the companies and the board seem to be just standing and telling everyone that they are the one who knows the best, but I think shareholders should know the best. And here is my question, that her term as of today is expiring on 30th of or whatever the June of 2018. But last year the board in its own wisdom decided that they will give her a 3-year extension. But that extension I don't think has been approved by central bank. So as of today her term is getting over in June 2018. So where is the question of this giving extension of another 6 months unless it is approved by RBI? Where are we on this? Because I think there's too much of controversy on this whole CEO post of Axis Bank, and I don't think the board has really come out very well in this. Last 1 year, they're going back and forth on this whole issue, and I think today what they've done is even confuse the matter even much more. Because as things stand today, her term is expiring in June 18 because RBI has yet not given the extension. So how this term is curtailed now for instead of 3 years, it is 2.5 years. I mean, just about 6 months, and 2.5 years are left unattended from that point of view. Secondly, even if assuming that this is for a smooth transition for a new CEO, I think it would have been wiser for the board at the same breath to announce that this is what we are doing to search for a new CEO once again.
If the regulator does not find her fit and proper to continue as CEO for 3 years, I do not see how the regulator can consider her for 6 months more. And therefore, it is the duty of Axis Bank to find another CEO. How can you have, when the RBI has rejected her for 3 years, how can you again go back to the RBI and say you want her for 6 months? And look at the financial performance in the last 1 to 2 years of Axis Bank under her leadership. Profitability has collapsed. Operational risk management is virtually non-existent. The kind of arrests you've had for money laundering, the asset quality is out of control, and this has all been under her leadership. Therefore, in my view, RBI had a very proper case not to renew her extension. I'm amazed that Axis Bank, despite all this, their performance appraisal system of their CEO, they thought she's fit to serve another, 3 years. And how can she be fit to serve even 6 months, I would ask?
Well, speaking about currency and commodity space, Indian rupee first, it was quite a volatile session for the domestic currency yesterday. It came off from its 1-month high of 64.85 levels against the dollar to close above the 65 mark against the greenback. Now remember, this was the second straight session of decline for the home currency. And speaking of bond markets, yesterday sovereign bonds declined after recent rally, and hence the yield on the 10-year benchmark security rose nearly 5 basis points to end at 7.23%. Now in terms of flows into debt market, global funds decreased their rupee debt holdings yesterday after infusing for 3 consecutive sessions. They decreased their portfolio by nearly 630 crores according to NSDL data. Well, on the global front, dollar index trades low against major currencies for the third straight session. Now it trades well below the crucial 90 mark in the early Asian hours. While speaking of euro, it climbed nearly 0.3% against the dollar yesterday after ECB president commented that policy makers are seeing strong economic growth in the euro area, thereby supporting the common currency. And lastly, speaking of dollar rupee, now it is trading at 64.85 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade. Well, having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up from the market today?
Morning, Saloni. Plenty of action from the commodity space, starting off with oil prices, which are trading soft. But overnight, they rose the most in about 2 weeks as the trade war concerns eased. So WTI was up more than 2%, while Brent surged as much as 1.5%. Now, as far as the inventory data is concerned, the Bloomberg survey indicates that U.S. crude oil inventory is likely to fall 1.4 million barrels for last week. However, the Cushing crude stocks, that is likely to rise as much as 2 million barrels for last week, once again as per a Bloomberg survey report. Now, shifting focus to the base metal space, the index itself closed about 1.6% higher and rose the most since last month. Now, aluminium was particularly in focus, which was up nearly 5% and surged the most since 2011 on sanctions. Now, Rusal, which is the biggest producer of aluminium outside of China, that was impacted and shares declined as much as 40%. As far as the other base metals are concerned, we had nickel, copper and tin, which gained on the London Metal Exchange, while lead and zinc actually slipped. Now, if you look at the Shanghai Futures Exchange, most of these base metals have started on a positive note, with Shanghai Copper and Shanghai Steel gaining more than 1% each. Shifting to the precious metal space, we saw some uptick come about for gold prices and palladium on account of surge in volatility. So the volatility gauge for both of these precious metals surged to a 1-year high.
Back to equity markets, bunch of stocks that we'd be tracking this morning. To begin with, we're going to be tracking Wipro, which is going to be impacted. It says that it's going to be impacted in terms of its bottom line performance by less than 1%, or to be specific, 65 to 75 basis points, as one of its telecom has filed for insolvency. Second in the list, we have Gravita, which has started commercial production of PPCP granules at its Andhra Pradesh plant, which is done by installing an extrusion line and the imported washing line. line, which has an annual capacity of around 12,000 MTPA. Next on the list, we are tracking Max Financial Services, where the board has approved the proposal to pursue acquisition opportunities by its life insurance business, which is Max Life. The funding proposal worth 5,000 crore has been received and submitted and approved from KKIS, Standard Chartered and TPG. Next up in the list, we have Newland Laboratories, where the company is going to be raising funds through QIP. It's going to be issuing 16.75 lakh equity shares, which are going to be via QIP method. And this is going to be not just for repayment of your debt and strengthening balance sheet, but also for investing into the recently acquired manufacturing facilities. Next on the list, we have Jyoti Structures, which is going to be a Bloomberg Quint exclusive that we have. A committee of creditors have approved Sharat Sanghi-led consortium as a winning bidder for the company. Now the consortium has offered bids worth around 3,500 odd crore to creditors over the span of 15 years. In bulk deals, we are first tracking ICICI Bank, where Merrill Lynch Markets has gone ahead and bought 0.5% stake in this counter. Also, we are tracking Lemon Tree there, which is relatively a new kid on the block, where Mirae Asset Asia Leader Equal Fund has bought in around 0.65% stake in this counter. Next up in the list, we have Suven Life Sciences, where Canara Robeco Mutual Fund has sold in a 0.6% stake for this counter. In terms of the stocks and a couple of reactions that we are anticipating due to their meet with several fund houses. First up on the list, we have Purvankara, which is going to be meeting a couple of fund houses like AMC, Sundaram AMC, Westbridge, Goldman Sachs and Premji Invest today. Also, we have Hind Rectifiers, which is going to be meeting IIFL Wealth today. Shriram City Union Bank Shriram City Union Finance may also meet Maybank and Newton Investment today. Also on the list, we have Royal Orchid Hotels, which is going to be meeting Bank of India, AXA on today, on April 10th.
The Supreme Court has said that notices will be issued inviting objections to the sale. Now, this is done to ensure that all the assets are unencumbered. Remember, on the last date of hearing, the Supreme Court had asked Unitech to submit a list of all their unencumbered assets, and with this issue of notice, that will be ensured that these are all unencumbered assets. Remember, all this is done as part of the plea where the Supreme Court is hearing home buyers' plea as far as their flats and refunds is concerned. The Supreme Court has also today allowed Unitech to go ahead with the sale of Unitech Power Transmission Company, which would be sold to Shapoorji Pallonji Group. The Supreme Court again has made it very clear from time to time, and I once again reiterated that as far as the bail of Sanjay Chandra is concerned, the Unitech Group or Sanjay Chandra will have to ensure that money is deposited in the Supreme Court, which the court has directed in order to refund the home buyers, and only then will the issue of bail be considered. And now we will get to know on the next date of hearing, which is May 2nd, as to what is the steps going forward in this case will be taken.
The top 3 stocks that you need to keep on your radar based on yesterday's delivery buying and selling. The first stock that you have to keep on your radar, that would be CG Consumer, which was up about 4% and saw delivery buying of nearly 100 crores. The delivery volume actually surged more than 3 times at 40 lakh shares as compared to its 5-day average, and the total volume surged nearly 4 times at nearly 51 lakh shares as compared to its 5-day average. Second stock to watch out for, that would be ICICI Lombard. Now that saw some delivery selling. It was down about 4% in trade and saw delivery selling in excess of 50 crores. The delivery volume shot up 150% at 6.85 lakh shares as compared to its 5-day average, and the total volume surged nearly 3 times at about 8.5 lakh shares as compared to its 5-day average. Last and final stock to keep on your radar, Balkrishna Industries from the tire space. Now, that was up about 5% in trade and saw delivery buying of more than 100 crores. The delivery volumes shot up about 140% at about 9.5 lakh shares as compared to its 5-day average, and the total volume more than doubled at about 20 lakh shares as compared to its 5-day average.
On the big brokerage calls for the day, first we have a CLSA on Future Lifestyle Fashion. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 535. Now according to the brokerage, Future Lifestyle Fashions is an integrated play on premium and value retailing. Now the brand factory stores of the company has a unique business model given its near monopoly status, increasing bargaining power with the brands and its ability to achieve quick break even. On the other hand, the company's central stores focuses on premiumization. Now the brokerage is expecting the brand factory and central revenue to grow at a compound annual growth rate of 31% and 18% over FY18 to FY21, and it is expecting the overall EBITDA to grow at a CAGR of 22% over FY18 to FY21. Now the balance sheet of the company is also improving with its debt on the books coming down. Also the brokerage is saying that there is a possibility of stake sale in the investee brands to create more value for the company. Second we have is Deutsche Bank on Indian real estate. Now according to the brokerage, the real estate sector is entering a structured growth phase as the worst of the sector specific policy drags are behind and the cyclical recovery momentum is beginning to turn positive for the sector. Now the demand supply dynamics in the commercial segment has improved for the developers and is gradually bottoming out in the residential property market. Now the sector is under-owned by the domestic mutual funds, which is beginning to reverse now according to the brokerage. Now it also says that the valuations appear expensive as they reflect the lows in activity momentum but do not price in the potential cyclical acceleration that can come in going forward. Now it has initiated coverage on Godrej Properties with a buy rating and a target price of 1,000 rupees, which suggests a potential upside of 40%, and it also has initiated coverage on Oberoi Realty with a buy rating and a target price of 650, which suggests a potential upside of 30%.
The design of this bottle started in Terre Haute, Indiana in 1915. At the time, Coca-Cola was being sold at soda fountains or in a glass bottle called a Hutchinson. But this simple, straight-sided bottle was easy to copy, and imitations were flooding the market. The solution? A national contest for a new bottle that would make Coca-Cola stand out, even if the bottle were broken or you touched it in the dark. The Root Glass Company got to work on their competition entry, looking up the word Coca in the encyclopedia and coming across an illustration for a cocoa pod. The curvy, ridge shape appealed to the team, who used it as the basis for their winning design. The first bottles hit the shelves just a year later, with the added touch of the glass being colored German green, later changed to Georgia green, in honor of the Coca-Cola Company's home state. Sleek and iconic, this is the design that's flaunted its curves to become the trademark of the most popular drink in the world.
Well, lots to talk about over the course of the day, starting from the international markets over to the Indian markets. You'll find all of that on the website bloombergquint.com, but you'll also find several stories that you should consider reading. Here are just a few of them. The US budget deficit will surpass $1 trillion by 2020, 2 years sooner than previously estimated, as tax cuts and spending increases signed off by President Donald Trump do little to boost long-term economic growth, according to the Congressional Budget Office. In other news, Facebook Incorporated Chief Executive Officer Mark Zuckerberg, in his testimony to the US House of Representatives, said all of Facebook's problems are his mistake. And India's badminton team created history at the Commonwealth Games yesterday by winning gold in the mixed team event. This was India's first ever gold medal at this particular event at the Commonwealth Games. India's men's hockey team also progressed to the semi-finals after beating Malaysia 2-1 in their round-robin match. India's current medal tally now stands at 19, with 10 gold, 4 silver and 5 bronze medals. Well, that's all you need to know going into trade today. Up next is Indian Open on Bloomberg Quint, so do stay tuned.